Hi everyone, David here with just a quick message before we get started with today's show. Basically, the process I've been experimenting with for the last few episodes of recording the show and then cleaning it up with some editing and releasing it is taking quite a bit longer than I had expected. However, that is not a problem if I was doing audio only. So that's what we're trying for today's episode. Mike and Jim and I recorded today's episode, and I'm releasing this one audio only. So I'd like to invite you, if you're at your computer listening to this, follow along on your own charts if you would like. And if you have any thoughts about how this worked out, please contact me at the TimingResearch.com contact form. Thank you. Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 89 for August 13th, 2019. Today, we will be discussing your trade ideas. So over the last few days, about 30 people submitted up to 5 symbols each, and I put the list together that we are going to talk about. We are recording this at 4 p.m. Eastern Time, and it will be available on YouTube and your favorite podcast directory. So just search for Timing Research and subscribe. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I have arranged for Michael Filighera and Jim Kenney to be back today, and Jim will be moderating. So I'm going to go ahead and turn it over to him.
Okay, thank you, David, and welcome everybody to the broadcast here today, where we will share our opinions and our views on what's going on out there in the market. Michael, quick background on yourself and your firm, and we can get started.
Okay, I'm Michael Filighera. I am a trader. I have been trading in the market since 1979. I was an options market maker here on the Pacific Exchange. I've traded here in San Francisco. I've traded in London, Amsterdam, Germany, and then back again here to San Francisco. I left the floor when the floors were all closing and have set myself up here in my home and began with Logical Signals. Logical Signals actually has a goal of just providing useful analysis on a daily basis and basically helping people learn day trading. And so I've switched from options to futures, and I basically focus on day trading because it's much easier to manage your risk.
Okay. I'm Jim Kenney, a content provider, optionprofessor.com. And I've been in the investment arena for decades and have done hundreds and hundreds of seminars through thousands and thousands of investors, teaching them the uses and the risk of options. So I am going to give you my best guess on how things look right now and give you some things that I'm looking at as well. But we're going to start with the list here, and then later in the broadcast, maybe me and Mike will be able to give you our personal opinions on some things that are going on. Obviously, big bounce back up today because of the suspension of the new tariffs. Kind of offsetting the fact that you can't fly in and out of Hong Kong. Right now, we're going to start with TWLO. And what are we seeing here on a buy, sell, or hold type situation of Twilio?
It's an interesting situation, as you mentioned, Jim. And I think that really it becomes more difficult to determine, do I buy, sell, or hold, because the algorithmic and traders are reacting to every bit of news as it pertains to China and the trade wars. As we've seen here in Twilio, the stock basically was 1, 2, 3, 4, 5 times it's tried to break back above 150 and get stuck. So I'm going to continue to say that 150 is some pretty solid resistance for Twilio right now. On the daily, this move back up truly was not that effective for Twilio if you consider that it started the day just below 130, finished the day at 132. I think that it's just a bounce, which would tell me that this particular stock likely has one more down leg to do, and it will go below that 121 low that we saw back at the beginning of August. If it does that, it likely is going to head down and at least test, if not break, the 200-day moving average on my chart, which is sitting at 118.12. If it breaks back above 140, then I'd say that pullback correction is over, and it's again going to attempt to break 150.
Okay, that sounds good. With TWLO, when it was up at 150 back in June, it was 30% above its 200-day average, which was 116. At that point, it was a little bit easier call to do some hedging, meaning selling some calls, buying some puts, right, selling out stock, and replacing it with long-term calls. Now you've had a correction down here pretty good, and it's kind of in no man's land between the high and the low, meaning in between 116 and 150, and never a great time to make big decisions when you're in the middle of the street. So again, if we were to go down towards the 116 area and we'd hold these lows kind of thing that we're looking at, I would find it something that might be interesting because the trend is still up basis the moving averages. But and if it went up towards the high and couldn't take it out, I would be interested up there to do something. So here in the middle of the street, I would say that at best it's a hold because it hasn't penetrated the 116 level, yet it has definitely shown that the blooms come off the rose. So basically it would be a hold, but I would, I'd keep it on a short leash. Let's go to the next one, which has been moving very big lately, and that is ROKU, Roku. And that had some very big volatility lately. So, Michael, how are you seeing Roku right now?
They obviously like the earnings. I'm going to move this one up. I'm working off of a daily. Let's go up to the weekly and take a peek. These are all-time highs up here, folks. Yeah, these are all-time highs for a stock that came public last October at $15.75, now trading at 142. You guys can do the percentage math on that one, but it's huge. And I am going to say that this, again, since it's in uncharted waters, so to speak, what can we say about how far the stock would go? I am going to do some quick math here. Wow, that's big. If I had to say that it's probably reached its peak. Now, that's based on just some common Elliott guidelines. I've always used Elliott Wave, and Elliott Wave is very good when you're getting into uncharted waters. And this is what Roku has done now. Based on these earnings, I'm going to say the earnings came out on August the 5th. This thing skyrocketed. And then today, or actually for this week, it's continued to go up, likely got that boost along with everything else, but then settled back down. And I don't like the fact that there's a strong decline, in my view, even though it's pointing up, in the momentum. And the momentum tells me that there's not that many people coming in to participate, even though the volume for the week is pretty good at 39, almost 40 million shares for the week. So I'm very, very cautious. Again, Jim, as you likely will state, I got the 200 on the weekly chart at 47.38. That's huge above.
Yeah, but that's been huge for a long time. So that as an indicator has not been helpful. It's just something that would not be supportive. Yeah, you're making a good point, that when the market gets into uncharted territories, they don't call it uncharted territories for nothing. So then you try to do some numerical counting, which is basically what the Elliott Wave and Fibonacci numbers and all those guys are trying to do.
Right.
But what I would say here is that obviously 20 million today and about 20 million yesterday is a lot of volume. And for every buyer, there's got to be a seller.
Right.
So obviously when you get this kind of stampede in here, the guy who's selling it or offering it is probably going to put the price about as high as humanly possible to take in all that volume. And then once that volume does dry up, it's very difficult to sustain the prices sometimes.
Right.
So obviously it can fall under its own weight. Obviously 142 down to 135, it is already falling a little bit under its own weight.
Yeah.
And again, this is a company that, people are very, very big on here, but it has to be viewed as speculative with the kind of volatility it's had. So, right now you got a line in the sand of 142. The longer it doesn't take out 142, then the odds are increasing that you might see a correction. So 142.10 is today's line in the sand, and 135 is where it went home. The volume has been huge, so obviously anybody who wanted to buy this thing is buying it in the last 2 days. And now the question is who wants to buy it at 145 or 150? And if there's nobody who wants to do that, and the people who bought at 50 and 100 want to start selling, and you have a no buyer environment up here, you could get volatile on the downside as well.
And what would you tell people that own the stock?
Well, own the stock, I would do a little bit of hedging here, and I would take a little bit off the table so I'd have a free look at the stock. If you bought it at 50, once it went to 100, you could sell out half your stock, and you'd have a free look at the rest of your life on this stock. If you bought it at 65 and it's at 135 and you sold out half, you'd have a free look at the rest of the stock for the rest of your life. With this kind of a company, you probably don't want to run away from it because maybe they're onto something. But on the other hand, if you don't manage risk, risk will manage it for you.
Yes.
And so
Well stated.
basically that's how I feel. Hey, let's spin it over to Uber because, Uber is definitely in the news as well. Both of those companies, Lyft and Uber, were getting tagged a little bit yesterday, and they didn't really come off the mat very much today either. So what are you seeing on Uber, Michael?
Uber lost $5.2 billion last quarter. And what they're actually in the process of doing is burning through every investor's dollar. And not the new stockholders. These are the investors that have been holding this company up forever and a day. Now that it's gone public, they are beholden to the shareholders now, and they're probably battling it out on the C-level and upper-level management, trying to figure out how are we going to turn the boat around. Now, I've not heard any of their plans, but I think the market speaks louder than anybody else. And in this particular case, the market is showing massive disappointment in the stock coming off of a high at 47 back in June and dropping like a stone after these earnings and down to what they got as low as 36.10 today. I don't hold out a lot of hope. I am not an owner of the stock. I would not buy this stock. It does trade options, and there I think you could get a lot of play if you are an options trader. There's probably a ton of positions put on, but I would stay away from the stock. If you're long the stock and you don't have protection, you might be too late.
Yeah. Well, as far as I have a personal experience with Uber, because I was over in Italy and France. Now, in France, Uber was pretty much half price of what a cab would be, so it worked out great. In Italy, the taxi guys are fighting them, and pretty much they're the exact same as a taxi. So the big price advantage in Italy didn't seem to be there. Here in Nevada, to go to the airport used to be a certain amount, and now it's right back. It's twice what it used to be, and it's about $2 more than Lyft. So I see a company that started out trying to get customers through price, and then they're now moving the shells around, and then also their international situation is not panning out probably as they hope, and now their domestic situation, they're getting a lot of riders stolen by Lyft. So that's how I see it, but I'm no expert on it. But certainly the prices are making new 52-week lows practically. So
yeah, and that's what I was just going to add.
If you like to be on a Titanic, enjoy the deck chairs. But right now it does very good. I can see from my personal experience why it's not doing as good.
Right, but I just wanted to add, 36.08 is the low. Of course, the stock just went public in May, so we don't have a lot of history. And it touched 36.10 today. So it's
and you got a lockup period that's going to come off on November 6th. So that's probably not a great thing either, as people who want to grab their money might start grabbing it.
Right.
Anyway, it's on the defensive. That's all you could say. If you're in there, like you're in Tesla. You believe in some concept and you don't care what the prices are. And if you're in there hoping it goes up, right now that's hoping against hope. Let's turn towards Microsoft, a little bit more stable company, I believe. And that very much has been very difficult to bring down for any meaningful amount of money. And let's see what Microsoft looks like right now at 138.60. You can still shout out at the all-time high of 141 and change. So, and today everybody jumped back in when they wanted to jump back in. They definitely picked this name as one of the ones to get back in.
I agree. And I think the last time you and I spoke about Microsoft, I basically said, I like Microsoft. I like it as a company. I like the products. I like what they do and how they do it. And now that this thing has, of course, I don't know the conversion to really state that 141.68 is an all-time high, but this stock has gone through so many splits and everything else. I don't know how to convert that, but if I have to think that 141.68 is the all-time high, I have to think that pre all the splits, it's somewhere around $500. Now that's pretty.
I wouldn't know, but it's going to be higher than it is now. That's for sure.
Absolutely. Absolutely. And I feel very strongly that the stock pulled back very nicely, did a beautiful correction down to just above that 130 level. And again, this is on the daily chart, and now has begun its next rally. I would anticipate, unless something really comes out, and it may not even be about Microsoft, but again, we got the China trade war, we've got other things going on in the geopolitical area, that it will affect the market, and therefore Microsoft, being a member of every index on the planet, will have to participate. But again, it may not say anything about Microsoft. So on dips, I would be a buyer. I would look for this thing to create another new all-time high. Once it gets there, folks, you're going to get the breakout buyers. And so I think that 145 is definitely not out of the picture, if not higher.
And this is a big component of the S&P index fund. So if you're a believer that the S&P is going to get it back on the bicycle, this thing's got more to come. If you're a believer the S&P is going to revisit the 2700 area or 2800 area or whatever, then it could test the 130. And if it breaks 130, then you're talking about about 120.
Right.
And so that's basically what you're looking at. But that since December, that company has not taken out any real reaction low. And so this 130 that it hit took out a few lows. That's the first time for that. And then if it takes out 130 this time, then I'd be a little bit more concerned about it, and I'd probably do a little hedging if I could, because there'd be a reason to hedge if you start blowing out 130 and 120. That's for sure.
Agreed.
Okay, let's turn it over here to the airplane company that couldn't fly. That's Boeing, and everyone loved this thing at 446, and I was telling people that the moving averages were down at 350, and it's getting very extended, so you should be hedged or cutting back at the 446 level. Of course, I didn't know they were going to have all these plane crashes, but things just happen that way sometimes as far as bad news when it's overextended. And so what are you seeing at 332, though?
At 332, I don't think it's over. I don't think it's over by a long shot. I think Boeing's problems go much deeper than the company wants to state, and I think it just becomes too much corporate versus what's really going on. So I think that when the story really starts to play out, now again, this stock was down today against a market that roared higher, and there was not anything that anybody could do to pull this thing up, to let it at least test 340. So I think that there's a lot going on that maybe has just not come out publicly yet. I would continue to look at the options. I would imagine that the volatility is juicy beyond belief. So there's a lot of volatility play in this. And again, I think that this stock goes and retests that December low at 292.47.
Their production got cut substantially, and that, of course, is why the thing has been hit lately, is that they came out and confirmed that they're not producing as many planes right now. I think you brought up a good number, 292 or 292, 300, whatever, because if it takes that out, and if it did it on big volume, that would be indicating in my mind that the problems are longer term for Boeing and not short term. And they have been raising a lot of money in the corporate bond market. I don't know if that's good or bad news, but this is a stock that it's into an area where if it was going to stop, you would think that 300 area would be the area, and clearly it has to get above 380 or so to get back on the bicycle. So there's a lot of.
The other thing is that you mentioned a very, very good point, and that is that they were raising a lot of money in the corporate bond. I would go back and I would look to see where those bonds are trading now, because that would be another clear signal, is that whoever was buying into that for the long term, and possibly based on the MAX 9, taking off and all the orders, now that the MAX 9 is grounded, and probably grounded to at least the beginning of 2020, from what I hear, what's that going to do?
The yields, I did look at the yields, and the yields were higher than the bank yields for similar maturities. So they were paying a little bit more, in my view, than some of the other corporates out with the same maturity. So I think the people who buy corporate bonds also want to get paid when they see the stock tanking and the news not so good, because they don't know where the liabilities are, to be sure, and they don't know when they're actually going to get on stream. So they want to get paid that risk. But it looks like a company that if you owned it and you haven't sold anything, you're obviously going to grit your teeth and hope it holds 300. And if you want to, dollar cost average using 300 as your base, that's probably not the most unbelievable idea around either.
No, I would agree.
Because it's a two-horse game, Airbus and them. And so, after they clear this stuff up at some point, they probably are going to be a bargain again, because of the fact that obviously they're in a two-horse race.
Right.
Next one up is MU, Micron.
Micron, one of my favorite stocks. Micron technology is completely misunderstood, and I think that a lot of people are looking at the new technologies that come out, and then they seem to forget about the chip makers. And, Micron has seen its good days and its bad days. It seems to be back on a roll. The only thing that concerns me right now is that off of this mid-July high that we saw at 48.75, it has truly just come off, and this again is on my daily, it's come off in 5 waves down. That is a negative. That's a negative for the near term, because I'm using a daily chart, the near term picture to the midterm picture for Micron. It's done a nice rally. It participated today, of course, in the takeoff of everything, and including, the tech sector. I don't think it can hold above 46. If it can get to 46, it's a gift. But this tells tells me it has at least another decline coming, another leg down, and that leg is probably going to be at least $8 to $10 from current levels.
Okay. I think it is very important that these lows hold, because just like on SMH, which is the ETF for the semis, it had a pullback to about, 107 or 108 this month, and now it's going away from that number. So that's good. But if we come back down and take that number out, then you're going to be back in the soup, and it won't be a very pretty sight. So I think you've got a decent line in the sand if you want to be bullish on both the SMH at about 107 and on the Micron at around 40, I guess.
Yeah.
And then basically,
yeah.
I wouldn't want to take way under 40 if I was buying it now, because that pullback should be over if it's good.
Yes, and the thing is, the pullback is not, and in my opinion, is not over. So if you're a long-term holder of Micron, you're going to want to learn how to protect your position using puts or calls. Get the options involved. And if it starts to pull down, you're going to be glad that you have your hedge on, and you're going to then have to learn how to, or maybe you already know, how to lift hedges. Because I don't believe in the fact that Micron is not a good company. Micron's a solid company, and it's been a solid company in Silicon Valley, which is just south of me. And I think that they'll continue to produce good product and change and be in play. Now, what really gets affected when it goes through these bumps and grinds, of course, is its earnings. But that doesn't mean they're not retooling and additional product come out, and the next thing you know, boom, it's off to the races. So long-term holders, play it with options, hedge, and continue to just take care of your position. And if you're just in it straight with the stock, you might want to consider not being in it. Or, as you mentioned before, Jim, just doing some cost averaging if it comes off. Take advantage of rallies when it goes up.
Yeah, there is a gap, it looks like, on the graph between 34 and 36. And so if it takes out the 41 number, 40 number, that might be a logical place for it to go down to, particularly if they, give up on the semis, which they were giving up on it. Then they are not giving up on it. Now they gave up on it. Now they're coming back up. So you were up, you were down, you're up, you're down. So bottom line is they're volatile, but overall, I would still say that the overall chart is optimistic.
Yes, agreed.
Advanced Micro Devices, AMD.
The fellow cohort.
Yeah, pretty much story, They had a pullback there to 28, and it better hold, huh?
Yeah, but then the earnings or something happened here, a couple days ago, and it gapped. It gapped a good $3 or $4. Yeah. And I'm not sure what would have caused that, but because it looks like their earnings were back here at the end of July, and now we had this glorious gap. In any case, I actually do continue to like Advanced Micro, and I believe we're going to repeat the conversation you and I had last time we looked at this stock. I think we both liked it, and indeed it did finally break back in mid-July, and then it tried it again at the end of July, failed, boom, the earnings, boom, and that to me looks like a complete pattern, and the rally is back on. What is going to truly put the cork in the bottle here is that this stock needs to get back above 34. It needs to get back above 34.
And the bottom line is, if you look at that graph, 26 was the low, 34 is the top. It cannot sustain prices either under that or above that so far. If I'm looking to buy something, I'm probably, if I want to make some money, I don't want to just buy it for $1 or $2. If you're doing short-term day trading, God bless you, that's plenty of money. But if you're looking to buy and hold the thing for a while, you'd like to see, you don't want to buy it right next to the ceiling if 34 is going to be the ceiling.
I think if I was going to do a buy and hold, I might consider a covered call I might consider a covered call because I would want some type of protection.
Except I wouldn't want to short a call if I thought the thing was going someplace. But this thing's got a P ratio of 182. So God bless you if you're trading AMD because, obviously it's trading on future wonderful things happening when you got a 182 P ratio.
Therefore, I would do a cover call.
Yeah, I think I'd stand aside. Anyway, Cisco Systems.
Wow, we've got all the tech people here today.
Yeah, and that tried to come off the mat here today, but it didn't do a fabulous job. Well, I guess it did. It came up a couple of percent. Yeah. But it did come down pretty good from 58 to 50 or so. So the bottom line is, this is a company that's supposedly insulated a bit from the trade wars. That's what I've been hearing. I don't know if it's true or not, but that's what I've been hearing.
I would have to say no because they
said they did some things once the trade war started or something. I don't know. But
what
do you think?
Very true. In which case you would, and just to piggyback on what you're saying, if they did insulate themselves, then I would expect them to make all that ground up that they lost. Because when the market was going down, nothing escaped. Everything went with it. And basically because just a mass selling of baskets.
Right. No, I believe this is in a lot of, index funds as well as, and also income funds because it pays 266. Nice. So this is a company that's well represented in some very, very large ETFs, mutual funds, et cetera. So obviously, when people position back into the stock, this is one of the ones they buy. That's why it's up 2.29 today. And so, it looks like you'd like it to stay above this 50, 51, right?
Yes, I do. But I don't hold high hopes that it will.
Yeah. But at least it's pretty tight. It's a tight risk if you want to, try to cut things off at that point.
I agree, because I think that eventually what it's going to happen, it might try to sneak its way back up above at least at like 53.40-ish, and then it's going to roll over again. And you name the reason. I don't feel like it right now because there's too many, but I think that it's going to break 50.
Yeah.
Now that might be, again, a very near-term problem that the stock will have. If it breaks down below 50, you might get a little bit of acceleration in a sell-off, but then I think you really have to look very seriously to see, okay, pattern looks complete, everything is lined up, you buy it.
Right.
So,
well, let's go over here to a company that definitely benefited by hearing that the tariffs on phones are going to be delayed till after Christmas, and that obviously is Apple, which popped up here better than 4%. Of course, it was in a vacuum a bit. 233 is the 52-week high. It was down underneath 200. And so, don't forget, today, when you get this kind of news report and the market's been declining and declining and declining, Tom, Dick, and Harry are starting to short the market. And people are starting to hit this thing thinking they're going to be able to break it. In fact, I heard on one of the shows that somebody bet $5 million on puts that the S&P will be 13% lower by October. Wow. So there's a lot of people betting on the downside in the last week or so. And when you get news like they're going to suspend the tariffs, a lot of people are going to cover their shorts in addition to spec buying. The guy on the other side of the trade, the seller, can see that Tom's got to get out, Dick's got to get out, and we're going to raise the offer. And that's what they did today. They raised it to 212. They took in all the action. And what happened at 212? Well, the volume started to dry up, I'm sure. And then basically it fell under its own weight down to 208. Right. So, it's a merchandising operation. You need a buyer and seller, right? And if everyone's coming in on one side, the guy on the other side is like the guy with the gold. He sets the rules. And so the guy setting the rule today was the seller, not the buyer. It looks like the buyer was setting the rule because the prices were up. But the reality is the seller was setting the rules by raising his offer.
Right. Now, go ahead. I'm sorry.
So anyways, that's my feeling on Apple. What are you saying?
I switched over just to get some of the option data because Apple is a gigantic, huge retail plus industry option stock. And today's volumes were over 400,000 calls and almost 300,000 puts. Kind of pretty even balance there.
The stock volume was 48 million almost, and it only averages 24.
Yeah.
So that tells you how many people wanted to get in on this thing.
Yes, because they probably felt like you were saying, they were shorting on the basis that the China trade talks are really going to hit Apple. And then when it's over, oh my God, boom. And they just all threw their market orders back in. Now, having said that, they absorbed 47 million shares, and the price was 212 on the high. And obviously by the end of the day, that volume might have been drying up, and there's nobody else who wants to buy right now at 212. So there you go. I agree. But also toss into that mix, you've got stock traders, you've got a lot of option traders, you've got the algorithmic firms, which are coming in with the options, looking for the discrepancies between price, volatility. Apple loves volatility. That produces a lot more option trades. And so you get a lot of momentum going simply because you've got an option trade and they need the stock. So that's why I went over and looked at the options, because I wanted to see what percentage. Now, we need to be careful here because the current volatility percentile, so when it takes a look at that versus the markets, is 50%. Above 50%, the volatility is producing too much premium. That's going to cause a lot of selling of the premium, whether it's in the put or whether it's in the call. It's going to produce a lot of selling in the options. If they're selling puts, they're going to sell the stock. If they're selling calls, they're going to buy the stock. So we're going to have to see how that that balances out. Now, on a chart basis, I think Apple, again, reaches above 220 on earnings, comes right back off, bottoms in 3 days, and is now starting on its way back up. I think today's play will follow through until we get more news. So in other words, it's like if it truly is not going to have an effect until December, they're going to come back in and buy the stock. It's going to go back above 220, I would believe. And they might even take a shot at reaching the all-time highs. Now, what will stop that? If it turns around from here, and as Jim says, 200's got to be the line in the sand. If it breaks below 200, you're going to see a lot of people bailing on it again on the stock. And then who knows how deep that could go. If 47 million shares took the stock up $10, what would 47 million shares do to the downside?
Yeah, and it's also a main index stock, so
Absolutely.
obviously they have to buy it if people start buying the S&P because it's a main proponent of these things.
Right.
So irregardless. Now, the next one here is JD, which I think announced earnings because they had earnings coming out this week, and it had a big pop today. So
yes, they reported.
This is a Chinese firm.
We've done this one before.
Basically it was up 12% today,
yeah,
which is a heck of a good size move.
And again, a Chinese firm, the Chinese news. I'm trying to remember. I know we've talked about the stock before, and I'm looking at this daily. I'm going to pop up to the weekly to take another quick little peek on that. I do not hold out a lot of hope. I think the stock will likely come up and at least retest 32.32, which is the high out of the sequence. I mean, after it made its low last year at 1921, it's rallied up and it's got as high as 32, let's say 32.40. And I think it could come up and retest it. It might even attempt to exceed it. And if it can break above that with some momentum, then I think you got an easy shot at 36.38, but I do not believe out of all of this that this stock goes to new all-time highs or even gets itself above 45.
Yeah. Real quick, I think above 32, I'd be very interested in the stock, and below 26, I would probably be saying adios to the stock. In the interim, I would just see which one breaks first, and you do it as a momentum play rather than trying to pick which way it's going to break. Let's turn quick over to Snap.
Snap Inc.
This one was doing pretty good after their earnings, I guess. They had already gone up quite a bit. And they're at 17, so they're still getting a good bid here. Came out shaky, went, I think, from where it came out down to 4 here, change. And now it's got back on the bicycle because they obviously are talking a little bit more mature than they did when they first came out.
I agree. And volume, it's got good volume. I'm looking at the volumes, 27 million, 17 million, today 22 and almost 22.5 million. Good volumes, but I do not see a lot of life in this little stock. I'm not a buyer of Snap. I am looking for this thing to top out well below 18 and turn lower again.
Yeah, that 20 number from the beginning of the Q1 of 2018 looks like a pretty heavy number. And the fact that it's 70% above its 200-day average at 10 means that if this thing is going to go, it's going to go because, again, it has these believers and that don't care about the price.
Right.
And there's more than a couple of those.
Even on my weekly.
There's more than a couple of those kind of stocks running around, right?
Oh, yeah. Yeah.
All right, let's talk about the drugs. Merck. I was looking at Pfizer because it's paying almost 4.5% dividend, but it's like catching a falling knife. Today, Merck did turn around a little bit. It pays about $2.50, $2.60 on a dividend. But what are you thinking about here? Because these drug stocks definitely, well, this one hasn't gotten hit. Pfizer's gotten hit. Merck is obviously the one-eyed man in the valley of the blind with the pharma.
Yeah, and I think, Merck, it's got a lot of products in the pipeline. It's got good products out already. I mean, drugs that are making a solid difference to people's lives. Let's say, I know they've got a lot of high-level cancer drugs. They do HIV drugs. They're into that market. And I really have a lot of hope for the biopharmaceutical industry, of which Merck is shifting more towards the biopharmaceuticals versus just, the everyday stuff that we use. Yeah. This thing is very close to 87.07, which is the most recent high. Again, I just got to pull this open to the weekly. Still 87.07. I think it's a slam dunk that it's going to at least break that and make an attempt at 90. And again, now we're starting to move into uncharted waters. So quick up to that monthly. We've got from the year 2000, a high of 96.69. Could that possibly be in play? It most certainly can, but I would not bet the bank on it.
Yeah.
I think stock's going to make an attempt at 90. It's getting a little bit unmotivated here, and you're seeing more sellers come in and sell to the people buying it up. And to be honest with you, that tells me the sellers are smarter.
Yeah. To me, it's a very tough racket here at 86 because you're so close to the 52-week high that
Right.
you'd probably like to see it take that out and show that it could sustain these levels.
Right.
Before you start worrying about buying the all-time high. And certainly, if it breaks 80, it would be telling me that it's failed.
Yeah.
And the reason why it's falling, and you can see the stochastics are in the ozone here.
Yeah.
So you break under 80, I think that's the trade to get on the sell side. Rather than trying to buy the stochastics up here and the price near its all-time high. And many other
Right.
people in their industry don't seem to be doing all that well. So,
Right.
this could be a situation where it could be the last one to scream uncle, but let the prices dictate it.
Yeah. It absolutely could. You're right.
5, FIVE, 5 below.
5 below. I have no idea what they do, but let's just go
Well,
on.
I'll tell you, they're up 5% today, so they must have had some good news. And they are still $38 above their 52-week high. So
I agree.
the bloom
I
came
don't-
off the rose a while ago here.
It did.
And
I don't like the pattern in progress.
it's underneath the 50-day and the 200-day, which come in at 120. So I would say, what do you say about it? It looks like that
I think it
120
breaks
might.
5 before it hits 120.
Yeah, so if you want to buy things that I don't know about the cloud, but I'm sure it's probably under the cloud too. Huh?
Yes, and I don't like the overall pattern off the at least the 52-week high, which was 148.22. I do not like this pattern. It's showing a lot of volatility. So again, if you're a volatility trader, you're going to want to get into this one, but you're going to want to trade it via the options because the options give you a lot more space for being right or wrong.
Maybe it got the pop, obviously, because it's specialty retail, and obviously with the suspension of the tariff, everybody that says retail got a pop today, so that's probably why I got it.
And it did. But again, here's another one. It hits 115, and where's it close? 111. So
SPGI, is that
Say
what
that
it says
again?
here? Or is that L?
I don't know. Give me this symbol again.
SPGL?
ST or SD?
SP, no, it must be I. SPGI.
S&P Global.
Yeah. Obviously, the strong dollar is not helping global, and that's why it's a rough racket to be in. Got Argentina talking about defaults again, and you got a pop here today because of the news. But this is, it's been doing fairly well, obviously. It's up near the highs.
Yeah.
Let's just see here. It's I don't know. This is one I'm not familiar with at all. So if you have something to say, fine, but I have no idea what this is constructed as.
I am going to give the straight technical look at this stock because, again, it's S&P. So which part of the global markets participates in this?
I have no knowledge of this at all. So
I think, yes, this is going to break and it will make a new high above 263, let's say.
Yeah, you can't step in front of a freight train, and this thing's been a freight train for the last 7 months.
Quite a while, for the last 4 years.
Yeah, and it didn't even get hit very much.
So I think
at
it's
all.
going to follow the broader market, and if we think that the S&P up 51, almost $52 today.
Yeah. I just don't know it. There has to be something behind the curtain here because Korea is not going up, and Japan is kind of unsteady, and China is not doing so great, and I don't know where these guys are going to get those kind of returns. So rather than say anything about it, I would just refer somebody to investigate the mechanics of it first.
I would do that too, but I think again on a technical basis, you got 265 on the top side, and I think that would probably cook it. And I think you got 240 on the downside. If it starts to break, look out below.
Yeah, because you got a lot of real estate between the price and the 200-day average, and in my world, that's not a good thing.
Yeah, I agree with you.
Okay, Stone Limited, which is computer services.
What's this?
52-week low and high. I guess it hasn't been around that long. Came out around seen in December, went up to 45, and now it's back in the 30 area, which is exactly where these moving averages are around 27.30. What do you see on this company?
Can you tell me what the symbol is?
STNE.
C-Spine Holdings? No.
No, STNE is Stone Company Limited.
Got it. It was a T and I put in a P. Stone Company Limited. Well, limited means it's a UK firm to me.
Okay. It's on the NASDAQ, yeah.
I think it's done. I think that it's reached its peak above 38 last week, and it's now beginning its next leg down. I would not want to own the stock. If I do own the stock, I'm definitely going to start looking for puts if they're available. If not, you could take your chances, hold the stock until it looks like it might break below 30. Below 30 means it's, to me, that it's breaking the 200-day moving average, and it's basically cooked. We've got several year low. So back in 2017, late 2017, it hit a low at $16.14, rallied up to $45.62 in 2018. And now it's just not doing much. I don't like the
the moving averages are underneath the price. So from that standpoint, I'd say it's a hold.
If anything.
Yeah.
If anything, it's a hold.
Let's go and wrap up with a quick overview on how to get a hold of you, and if you have any overview on the markets that you want to share real quick.
If people want to get a hold of me, please feel free to send me an email, michael@logicalsignals.com. I answer all of my emails. You can ask a question. You can ask about my trading. You can ask about day trading. Whatever you think you need to ask, please feel free. My overall view of the market is that it's extremely volatile. We've got a lot of, if not all, algorithmic traders in here playing the game. That's what caused that gigantic push higher today, which then just starts an upward avalanche. I think the markets are cooked, beyond cooked, but that doesn't stop the buyers to come in. And again, as long as an algorithm can function and produce a profit, why change? So to try to put a spin on where all of this stops is pretty difficult. I'm amazed at the NASDAQ future jumping $185 today. I mean, that's amazing to me. But what this does, folks, for me, it produces humongous, and I mean, humongous trading opportunities on a day trading basis. You're limiting your risk. You're not assuming any risk, and it's much easier to manage.
All right, so people should definitely email you, Michael, and get an update on what you're looking at and get your slant on how things work over there.
Yes.
Particularly the short-term trader who is looking to do shorter time spans.
Yes, absolutely.
All right, as far as I'm concerned, like I say, I thought that the S&P was going to stop between 2950 and 3100 range. It certainly did that. I thought if it broke 2950, we could go down pretty good, which we just did. And now I'm thinking that it could bounce back towards 2975 or 3000. And if it cannot get through that zone, that would be a sell zone again. And then another takeout of the 2800 area in either September, October, or late this month. This is a time frame where the stock market does have some trouble. And I think that this throwback rally here we saw today may have a little bit more to it. But if I'd monitor 2970 to 3000 area as an area where it could fail from if it does roll over. Gold, 1520, 1580, I thought was resistance. It backed off 1520 to 1488 and changed today. I still think that 1520 to 1580 is going to be a rough area for gold to get through unless there's a big event that it has a parabolic move. The moving averages on gold are way underneath the market, and ergo, that's a problem. Last thing on interest rates, this TLT 144, if it stays under 144, then yields may be able to gravitate back up a little bit, but if the TLT takes out 144, then bar the door for another round towards 150 on the 10-year note. I'm Jim Kenney, and my email is optionprofessor@gmail.com. So just shoot an email, and I will be able to provide you information, including what stocks lockup expirations are coming up. Lift is going to be happening on the 19th, and there's a lot more after that. And secondly, there's a group of mining shares in gold and silver that I keep an eye on. I'd be more than happy to share that with you as well. Right now, I'm going to turn it back over to David to close it out. And thank you, Michael, for being with us today.
Thank you.
All right. Thanks, guys. Just a quick reminder to everyone. Be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get access to this or any of the past shows. And I just want to thank my guests again for today. Michael Filighera of LogicalSignals.com and Jim Kenney of OptionProfessor.com. Thanks, everyone.
Thank you.